All right, so we just heard from the bond king, Jeff Gundlach. He says the Fed needs to cut 50 basis points. Agree or disagree?
I disagree. I think the Fed is going to be at 25 basis points. Just get started. If you just come back and you look at a lot of the economic data that's come out lately, all the things that we've been discussing here at Piper, the economy still seems to be okay. And it seems like at this point in time, the Fed will get started with 25 and then look for some additional, perhaps, rate cuts later on in the year.
So, Craig, I know you're about to come on. You have a new note out. The title is Rustle Up Some Winners, alluding to the Russell 2000, the small and the mid caps. But I first want to ask you about this. We're going to show a chart with the S&P and the S&P equal weight year to date. So right now we have the S&P equal weight hitting pretty close to an all-time high, the S&P close to an all-time high. You can see the S&P 500, the regular market cap weighted ones, outperforming. A lot of that outperformance is tech. Why would you want to go into small caps right now? I know we're going into a rate cutting cycle, but it continues to be those bigger stocks, those tech stocks that have really powered the market this year, and you're also bullish on tech stocks. So how can you be bullish on tech and small caps at the same time?
Frank, it's a great question. And if you sort of look at the time frame post the highs we had seen back in the July time frame, you've started to see sort of a shift take place. You've started to see the Magnificent Seven stocks underperforming that of the small cap indexes, the Russell 2000 index. So again, we're starting to see some outperformance there. And Frank, we also know that when the Fed does start cutting rates, which is expected to happen here today, that you do tend to see equity markets work. And it also tends to be more of the interest sensitive parts of the market that work well. That will also benefit the small mid cap stocks like the Russell 2000 index or the SML or the mid index from the S&P 500, where you do have a lot of interest sensitive and a lot of financials. So again, we think that that's why they should outperform.
You know, speaking of financials, our data team, they rustled up some winners as well, at least some stocks hitting all-time highs. A bunch of financials yesterday hitting all-time highs. I'm looking at MasterCard, Visa, BlackRock, a number of those hitting all-time highs. And now you're also coming to us with some regional banks as some of your picks that you're seeing opportunities in. They include Huntington Bank and Ameris Bancorp. I want to ask you, I mean, there's a big divergence between these big financials. Obviously, payment companies are a bit of a different business as well. And these regional banks. How can you be bullish on both of these at the same time? How can both benefit from the same rate cutting cycle at the same time when we're seeing a slowing economy?
Frank, a lot of it comes down to the normalization of the yield curve that's going to take place. With the Fed starting to cut, the yield curve normalizes, net interest margin spreads start to widen. That should benefit all the banks across the board, not just small, mid caps, but large caps. So again, that's going to be the beneficiary and one of the drivers why these mid, small cap stocks should work and why the interest sensitive parts of the market should also do well. And then, Frank, in terms of tech stocks, again, they also tend to pick up and do well. We can find a lot of constructive looking stocks there. But again, think about as you come out of this, remember one thing, that the Fed at this point in time usually starts cutting rates when the market is about 5 to 7% away from making an all-time new high. Check, we're there right now. And typically the market makes a new high within about 69 days after that happening. So again, definitely equities are going to work.
So, Craig, if you're believing that the small caps, the mid caps, the Russell, they're going to participate, they're going to start to perform better after this rate cut. Your S&P price target is 5,800. Isn't it just time to boost that up? I mean, if you think the small caps are going to join and participate along with mega cap tech and financials, I mean, you sound bullish on pretty much everything. Shouldn't you be seeing a more optimistic outlook on the markets overall?
Frank, you're absolutely correct. I mean, 5,800 is a target we raised a few months ago. And I would say this, I make more friends by hitting these price targets than raising them than by putting an outlandish target out there and missing them. So from my perspective, we'll evaluate it once we get to that level.